quoted all the time is, the wealthy should pay their fair share.
Right.
And we can argue about what the fair share is. That's a policy debate. That's okay. But the vilification is the thing that's just the distraction. And by the way, if you really are being honest about it, we don't have a revenue problem in this country. We already have the most progressive tax system in the world. The top 1% of taxpayers pay 40% of all the tax revenue. The bottom half pay only 3%. We have already, and I think it should be zero. I don't think it should be 3%.
Right.
I think it should be zero. So we'd be making it more progressive that way. We actually have a spending problem.
Our city is dirty enough. We don't want to make more dirty.
Debates raged on for at least 3 hours at Hamtramck City Hall over the new ordinance of sacrificing animals.
Really ridiculous, catastrophic resolution.
If it's not passed, then we are ready to take it to the court for the religious rights. It is constitution.
This was the second debate of the new ordinance, and there was a crowd outside of the City Hall chambers filling out cards to speak, and they were watching it on closed-circuit TV.
No, it's not safe or sane or humane because basements or kitchens or backyards are not suitable places for live animal slaughter.
Many people, including Muslim residents, were against it, citing sanitary concerns if the animals are sacrificed in a home and not in a sterile environment, especially in the tight-knit neighborhoods of Hamtramck. The ordinance that was passed on Tuesday night says religious sacrificing of animals can be done as long as it is done legally and humanely.
I think it's the best compromise. We don't want to restrict religious freedoms, and we don't want to keep it random without regulations.
Many Muslims pay a butcher to perform the religious sacrifice, but for some families, it's just not practical, says Nawar Ali with CARE Michigan.
A lot of families will typically do it in the confines of their property, like in their backyard, their garage.
Hey guys, Carlos Cortez here with another episode of Scriptures in Wall Street. I hope you're doing well. If you haven't had a chance, please reach out. Go to Scriptures in Wall Street on Rumble, on Apple Podcasts, as well as YouTube and Spotify. We are there. I definitely would appreciate you giving us a like or follow. Anyways, my name is Carlos Cortez. I've been the host of this show for many years now, going on 5 years. And all we do here basically is just talk about controversial things when it comes to your money. More importantly, we talk about, if you're new to the channel, I am a retirement planner, and everything on this podcast is meant for education and information purposes only. I'm not giving investment advice, although I am a licensed financial advisor. If you would like financial advice, give us a call, 813-448-3446, or visit us at cortezwm.com. But on this podcast, we're simply just going to be talking about charts. We're going to be talking about things that your normal financial advisor probably won't bring up. You know, in business school, they taught us one thing, and I made a living doing the opposite. And that one thing was at the Thanksgiving table, at the Christmas table, at the Sunday after church table, don't talk about religion and money, right? Don't talk about politics and money. And that's all what we do here. I think if you get that out of the way, then you're going to be like to like. You'll be equally yoked and financially yoked, I would say, with people that you would like to associate with. So have those hard conversations. I think they're good. Who'd you vote for? Did you take the vaccine? Do you believe in late-term abortion? Is it okay? Is it okay to have same-sex marriage? Is it okay to have all these things? Like, let's get it out there, because chances are you probably not having those conversations with your financial advisor, maybe not even your barber, which I need to go pretty soon here. So if we're on the same page with the people that we like and trust, then conversations become a lot easier. They actually go on the same page. And so when we look at investments, are we funding what Boston or Massachusetts just relinquished? They banned the right to not have late-term abortion. So you can have a late-term abortion, you can kill a baby all the way up to birth. I mean, it's disgusting, absolutely disgusting. And these people are gathered, these demonic women are gathered and clapping like they achieved something. Like, why are you clapping on killing an innocent gift from God, a baby? It's disgusting. And they do it in the name of freedom or femininity or my body and my choice. It's disgusting. Well, it's definitely not your body. It's your child's body that God's blessed you with, and you stole it, and you killed it. So I don't want to even get involved in that, but it's disgusting to read that recently just passed, like this week. You know, what's also infuriating too is, and frustrating as a trader and a financial consultant. It's not just frustrating, and I say from a client standpoint, from a viewer standpoint, from a you standpoint, is that even with all the good news that are coming out, you know, you have inflation down at 3.4%. You have jobs getting better, even though the report came bad. You have all these news that come out, and actually, they're somewhat good news, and it doesn't do anything to the market. We have come to a place where good news is a scam. Like, good news doesn't mean anything. We've come to a place where Wall Street basically is throwing a party because inflation just hit 3.4%. Prices are still climbing faster than the Fed wants. Energy costs is astronomical, especially here in Florida, and they're higher just from a year ago. We are at an all-time high record territory when it comes to the stock market. Long-term interest rates still remain elevated, and more importantly, they were stagnant this past rate decision, and they're probably, like, I'm 90% certain they're going to go up. And somehow this is being sold as amazing news. So welcome to the modern market, where less bad actually becomes bullish and expensive becomes normal. And retirees are expected to carry risks nobody ever wants to talk about. So the last time we asked a simple question, what are you safe from? Today we need to just go further, because the market is approaching record territory. And AI stocks are basically going through the roof. Inflation appears to be cooling off, and Wall Street's already looking for another reason to celebrate. But celebration is not analysis. You know, we go back to scriptures, Proverbs 14, the simple believe every word, but the prudent considers well his steps. I mean, how many times we spoke about the passive will pay the penalty. The passive will pay the penalty for not doing anything. So scriptures completely warned us about the market, because right now investors are just plainly just asking several things simultaneously, like inflation is cooling, interest rates are fine, stocks are not too expensive, and AI will just justify today's valuations. But retirees can earn more income without assuming more risk. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in the 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals, to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. And sometimes those claims are true, but believing every bullish headline is not faith. It's financial gullibility. And gullibility becomes especially expensive when you no longer have a paycheck coming in. Like, are we being naive and gullible? The market just celebrated about all these factors, but what actually really did change? So just a quick market update. The S&P 500 closed around 77.48. It's up. The NASDAQ gained basically another 0.5% just the past 2 days as AI surges. Core Weave just bounced 19%. Super microcomputer gained roughly 19%. NVIDIA rose 3%. And the market message was completely, apparently clear. It said, AI enthusiasm is live, well, and kicking, baby. But inflation looks manageable, and investors still want risk. But let's inspect the inflation report that helped fuel the economy. You know, this celebration, this fake bro investor party, consumers' prices rose just 0.1% in July. And that sounds good. But annual inflation earned only 3.5% to 3.4%. Core inflation declined to 2.5%. And it's also encouraging. But energy prices were still up over 14.5%. Still, a year later, they're higher than last year. And shelter prices, as you know, and gas is up 25%, but shelter up over 3%. Food, even though they say it's 3%, it's more like 25%. And all the medical care, right? All the medical care rose literally 60 basis points just in July alone. And you know what the crazy part is? That Wall Street's celebrating this garbage, the direction of inflation. Retirees must live with all these crazy prices. So your grocery bill basically goes to $100, $120. Inflation slows. The bill does not return the same $100. It simply starts climbing more slowly from $120. Cooling inflation does not mean affordable living, guys. It means the loss of purchasing power may be happening at a slower rate. And Wall Street makes moves when this happens. The market doesn't need good news anymore, y'all. It just doesn't. Market does not appear to require generally good news at all. And so the fact of the matter is, it's only what is not being as feared. So is inflation still not being as feared as a Fed target? Fine. Is it falling? Great. The 10-year Treasury yield is near daggone 5%, 4% to be exact. And if it doesn't rise today, stocks are still trading roughly 20 times expected earnings. And as long as AI delivers years of extraordinary growth, the economy still grows, the market still grows, everything's all honky-dory. But you see the pattern, guys, here? You see how this is just propped up? This is just artificially and simulated, financially inoculated? Everything is at risk and is being exposed by the future expectations of it. So inflation will fall, rates eventually do decline, and earnings will catch up. AI spending will produce an ungodly amount of profits, and the economy will remain strong. But maybe, just maybe, like it says in Ecclesiastes 8:7, since no one knows the future, who can tell what else is to come? That is not a command to avoid investing. It's a warning against predatory forecasts that are just facts. The higher the market climbs, the more confident people begin speaking about the future nobody has seen. And that's when the spirit of discernment, this is when the Holy Spirit just gives you acknowledgement. He gives you power. He gives you the spirit of knowledge, the spirit of discernment. And the bull markets do not eliminate risk. They make it much, much easier to ignore. So this AI boom that everybody's talking about, no one wants to ask, but AI may be the most transformative economic developments in our lifetime. I totally get that. But that does not mean, y'all, that every AI-related investment is actually fairly priced. There's two completely different ball games here. A revolutionary technology, right, can change the world. Investors still will overpay for companies associated with it. The internet changed the world. Bitcoin is changing crypto. Many internet stocks still collapse. The railroads changed America. Railroad investors still experience booms, bankruptcies, as well as devastating losses. Innovation can be, in fact, real, but the price can still be wrong. Today's enormous amounts of money are flowing in like chips, data centers, cloud re-infrastructure, blockchains, computer capacity, you name it. The assumption is demand going to continue? And revenues will arise and margins will hold. And the largest tech companies will even earn acceptable returns on that spending. But what happens if the technology succeeds to economic disappointment? What happens when AI becomes widely accessible, available to everyone, but increasingly difficult to monetize? What happens if the competition drives the prices down, just like in every sector? What happens when companies spend billions and billions of dollars on infrastructure that becomes cheaper or obsolete faster than expected? We've seen this in tech all the time. The car phone, the land phone, the beeper. Even in gaming, the Atari, the Game Boy, the PS5. Look at it now. Everything's streaming. They spent billions of dollars designing these things only for it to get featherweighted out of and squeezed out. Reminds me of the railroad conductor. You remember there used to be a person at the railroad crossing where they manually used to put the railroad crossing arms down so you wouldn't cross the street when a train would come. That got replaced by technology, sensors. So Proverbs 22:3 says that the prudent see the danger and take refuge, but the simple keep going and pay the penalty. Notice the prudent, what they do. He sees, he doesn't panic. He does not even predict a date of disaster like these knucklehead rapture guys. Oh, yeah, God's coming or Jesus coming back on March 23rd of 2024. And then I'm looking at my wife. I'm laughing. And here we are. 4 o'clock rolls around. Sunset's getting ready. And we're enjoying dinner. Oh, I guess we missed it. Guess we missed the rapture. Yeah. So we don't know the day, the time, or the hour. It's going to come like a thief in the night. So I say that because the discerning investor, the biblically based investor, the confident man, the confident woman does not panic. They already have everything in plan. They recognize exposure. They recognize a lot of things wisely. But seeing valuation risk does not require abandoning the market. It requires refusing to worship momentum. The Fed has not declared any victory here. The Fed is still holding their target to around 3.5 to 3.75% in July. But three policymakers, three Fed chairs, in the Fed chair, decided not to cut them, to raise them. I mean, that's huge. As we said in our last podcast, there's so much financial conversation remains obsessed when the Fed will ride the markets to rescue. There's so much talk about it. But that creates a dangerous retirement assumption. If something breaks, the Fed will lower rates and stocks will recover. Maybe. But what if inflation prevents the Fed from responding as quickly as investors expected? What if stocks fall and energy costs remain high? What if long-term rates stay elevated so long that investors demand more compensation for inflation, government borrowing, and uncertainty? A retiree does not at all merely face market risk. They face sequence risk, sequence of returns risk, inflation risk, basically a serious decline early in your retirement from income, damaging withdrawals and how you can maintain a portfolio without going down. The younger investor may want to be able to wait, but a retiree may have to sell. And that's why the markets always come back is incomplete. People that say, oh yeah, the market's always going to come back. Well, what stage are you in? Are you in accumulating stage? Are you in distribution stage, preservation stage, income phase? Like there's different stages when you invest, but your shares do not have to come back after you sold them to pay expenses is what I'm getting at. The time horizon matters. Cash flow design matters. A historical average cannot pay this monthly's electric bill. So Wall Street and the insurance side sell two different fears. Now, let's just say what the most financial programs will not say. Wall Street and insurance often capitalize on two different fears. Do not miss the upside. This is the Wall Street side. The insurance industry says, do not suffer the downside. One monitors fear of missing out. The other monitors fear of losing everything. A retiree gets trapped between greed wearing a growth chart and fear wearing a guarantee illustration. That does not mean investments are bad. It does not mean fixed income is not bad or green money solutions is not bad. It means incentives do not disappear simply because the presentation used the word retirement. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. A green money account may transfer longevity or income risk to an insurance company. That can be valuable, but the guarantee depends on the insurance paying ability, their strength, and the contract may involve some limitations like surrender periods and liquidity restrictions, caps, fees, other trade-offs. So there's two fears out there. So in red money, the fear is losing everything. Wall Street wants you to be in red money. The second fear is the insurance or the green money side, the green money solution side, the green money side, which I'm a huge fan of, and it has helped millions of Americans, in particular thousands of my clients, is that they sell the guarantees. It's nice knowing that you have a contract protecting your principal. It's nice knowing that you can't lose in this account. It's nice knowing that you have an insurance carrier based on their ability to pay to guarantee your principal forever. That is a nice feeling, and something that is extremely valuable in retirement because you don't want to lose anything. So one monetizes fear, the other one monetizes safety. And for the life of me, I will not fear bait. I will not click porn, anything. I don't want to twist anybody's arm. I don't want to say doom and gloom. You got to buy this. I don't even want to say that silver is crashing and you got to buy real insurance like that. I don't even want to talk like that. But the fact of the matter is, it's just a tool. Silver is just a tool. Precious metals is a tool. Speaking of silver, we're going to be looking at charts here shortly. All of that is true. The bearish story is not automatically the intelligent story, though. Fear can be marketed just as aggressive as optimism. Anyone promising an imminent crash is like full-blown knowingly that they do not possess the actual date or time. Acknowledging uncertainty is not bearish, and refusing to overpay is not bearish. Maintaining liquidity is not bearish, and asking what happens if the popular narrative falls is not negativity. It's stewardship. And scripture does not teach maximum return. Jesus told the story of the rich man who landed produced abundantly. The land just produced a lot of fruit, but this man decided to tear down his barns and build bigger ones. And then he said to himself, you have plenty of grain laid up for many years. Take life easy, eat, drink, and be merry. But God called him a fool. You remember? Why? The problem was not that his land produced wealth. The problem was that he mistook stored wealth for guaranteed time. He treated abundance as certainty. He had full barns and a false sense of security or control. This is the spiritual danger in every side of booming market. We get our account grows. We start trusting the money. We start having this financial confidence that feels like spiritual confidence. And next thing you know, you make Jesus look like this, the small little cartoon character, put him in a cute little box and say, yeah, Jesus, I'll only call upon you when I need you, or I need to pet you or kiss you or just look at you and say you're beautiful. Your account grows, the confidence grows, and then quietly it becomes presumption. And we begin to believe that the strategy worked so well yesterday, it's got to protect us tomorrow. Scripture does not condemn preparation. If you remember, Joseph prepared Egypt for famine, and Proverb praises diligence. The Bible repeatedly calls us to count the cost, but biblical stewardship is not maximum accumulation at maximum speed. It is a faithful management without making money our refuge. Psalms 27 says, some trust in chariots and some in horses, but we trust in the name and our Lord God. Today, we might say some trust in the S&P 500, some trust in guaranteed income contracts, some trust in just green money, some trust in the Fed, some trust in silver, gold, and precious metals and diamonds, and some trust in AI, some are going to trust in the government, universal basic income, or social credit score, but none of them hold the spiritual weight of trust. A portfolio is a tool and is a terrible guide. But what I would ask anyone making any type of move is, do not panic because stocks are near record highs. Don't chase them because they are near record highs either. Instead, ask 4 questions. Number 1, we're going to ask, if stocks fell today and down for the next 2 years, which expenses would force me to sell? Think about that. If the stock market collapsed, which stock positions would I have to sell in order to cover my expenses? And number 2, inflation remained above my assumptions. Which part of my income would adjust and align with being fixed? So if inflation was to continue to rise, what part of my portfolio would remain fixed and not grow with inflation? Number 3, if I buy a guaranteed income product with the lifetime income rider, also known as some type of income annuity, what access to my money am I surrendering? What conditions apply? And whose financial strength supports the promises and guarantees? And the last one is, am I making this decision from a discipled conviction, or is it because the headline triggered greed or fear? These are questions that you should be asking diligently with my office or any office, because we don't want to base anything out of fear. We want to base something that is a discerned, educated decision that fits our objective with diligence. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals, to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. So it's important, guys, to understand that we need a plan. We need a plan that can cater us to retirement. That's not going to basically stronghold us. You know, I saw a Facebook ad recently, and it said, if you owned an annuity, you should get out of that garbage and learn why this fund is going to give you 29%. And it was an oil and gas REIT. Are you freaking kidding me? Like, if you're putting something in red, you're getting out of green money, you're going into red money. First and foremost, you got to be a accredited investor. Accredited investor is someone that has over $1 million liquid, or if you are married, you have to make over 300,000. If you're single, 250,000. You're considered a credit investor. You know why you're considered a credit investor? Because you can afford to lose. That's what a creditor investor is. You can afford to take the risk. And if you lose, you can't sue for market negligence or professional negligence. That's what a creditor investor does. You waive your right to sue. You waive all claims based on the performance of that account, and in exchange, you get higher returns. So I would be very, very cautious on those Facebook ads. And these guys are like smoking cigars. They look like they can't even run a quarter of a mile without dying. But look, this is what I do. If you want a place where your money could be secured, if you want a place where you can have principal protection, the ability to grow your account, the ability to have confidence in retirement, then give us a call. Give us a call, because we really, truly want to help everyone that needs our assistance. We truly want to help people that have the ability to invest in their retirement, that have a retirement. Maybe you have a 401k, maybe you have an IRA, maybe you don't even know what's going on and you need somebody to look at your stuff. Give us a call. You can call us 813-448-3446, or you can go to cortezwm.com. Also, just redid greenmoneysolutions.com. You can go over there, check it out. And I have these videos that are pretty neat. Talk about each and every option. If you don't know what I'm talking about, so yes, you can go to Green Money Solutions and watch all the videos. We have a new option, and each option, you can click on each option and it will tell you a little bit about that particular option. So go to Green Money Solutions if you want to protect your money and grow with the NASDAQ index. So right now, option 3 is extremely popular. So imagine getting a good 90% on option 3. And this is our performance, live performance, by the way. So here is a 5-year. We got a 17.5 return on a 5-year. Pretty phenomenal. A 1-year right now is at 8.28. So this particular index has ability to go in and out of the NASDAQ, back to treasuries, back to cash. Imagine having something like this on a day-to-day basis working for you and not even have to pay a fee, not even have to worry about the stock market crashes. The only thing that it does for you, it goes up when the NASDAQ is up. Pretty powerful. We can get this. Now we can get this with no bonus, no fees, no risk to your principal. You can move your 401k to this. You can move your IRA. You can move your brokerage account. Whatever money you would like to have principal protected in your state, you can get access to this. There is no cost to own something like this. All you got to do is give us a call, 813-448-3446. If you're doing the math, hypothetically speaking, your money should double within 4 to 6 years based on the strategies that we utilize, our 1 and 2 year methods, because you're simply going to make a good 80 to 90% of this index each and every single year. It's very powerful. So if I'm 40 years old, I put 100 grand, what that looks like in about 20 years, when I'm 60, you're looking at over $4.5 million. Maybe you're not 40 years old. Maybe you're 55. Maybe you're 56. If you allocated just 50% of your retirement to this account, wouldn't it be nice to have this account double in the next 4 to 6 years, hypothetically speaking, and then just take out 5-6% while your money is still compounding, and now your income is growing with inflation and without market risk, with just the all the risk that comes into retirement, healthcare, long-term care, food, groceries, gas, long-term care. I mean, there's so many things that happen in retirement that expenses can go up. Now you are preparing for your income while your money is growing, and all while you're waiting in an accumulation phase, is still growing with no fees and no risk. This is a very, very popular option. It's my favorite option. Option 3 is what I'm personally in. My favorite is I don't want a bonus. I don't want the big bonus. Right now on option 4, it's 30%. You got to have 75 grand and be willing to pay 1%, and also have be okay with having access to 10% a year. And obviously all the claims and the bonuses and all the guarantees are backed by A-rated insurance company and their ability to pay those claims and promises, as I said. But yeah, this is an amazing situation. Interest rates are going up, so it's a great time for green money holders, green money account holders. Bad for credit cards, bad for mortgages, bad for card notes, and bad for if you're borrowing money, but great for clients that have assets, that have retirement, and to refinance into a better earning, potentially earning account that will grow your retirement. Of course, past performance is not indicative of future results, but you get what I'm saying. You got to be in this equity-based index, because right now the bond market is going to be really iffy if they're raising interest rates again. Those bond prices are going to go down. We don't want to get caught up into that. And if you're a current client of mine, give me a call if you're interested in this, because chances are we probably can get you in a NASDAQ focus or growth-oriented focus account like this to better refinance, so to speak, your portfolio. Maybe you have old money in an old 401k. Maybe you have money in the bank. I just spoke with somebody that has $250,000 in the bank, and I'm like, dude, you don't own that money. Like, you completely lost that money until you pull it out, because you credited your bank with this money. So the only option you do have is to request withdrawals and get the money out. That's it. You don't own the money in your bank. And that is not my words. That's Google words, ChatGPT words. Look it up. You don't own the money in your bank. And so don't go walking around with millions of dollars in a bank and beating your chest. Oh, I feel safe and secure, when you don't, when you technically don't. You don't own the money. Even the gold in the security box at your bank, you don't even own it. Well, guys, I'm going to be out of here. I got to wake up really early tomorrow, take my boys to school. We are starting school. My youngest is finally starting school. And wow, what a hectic week. I'm pretty tired, but I still make time to podcast and talk to you guys because I love this. I love the ability to express my heart and my views on the market. But this is a long-term play, guys. Try not to get involved in the stock tips and the trades. And I wanted to talk about trades, but I'm just exhausted. I will do it this weekend, though. I want to talk about Hertz. I want to talk about silver. Silver's popping because the dollar is crashing again. Or not crashing, it's going down. So silver is being traded right now. You should see a pop in silver if you have silver, if you held it on. But be very careful, guys, because they're not talking about it. And this is when the volatility happens. So, yeah, I'm gonna be watching a dollar and silver. So I'll be podcasting about that. I might even do like a live on it just so you can see what's going on. All right, guys. Love y'all. And don't forget to get your amazing peptides from Get Me Lean USA. You guys seen my weight transformation. As you see, I'm looking a little thinner than you probably thought. Go to getmeleanusa.com or how you saw me. All I'm doing is just walking. I'm walking 12,000 steps a day. I'm eating 180 to 220 grams of protein. I'm lifting maybe 2 or 3 times a weight, and I'm playing hockey twice a week. But it's really simple, and I'm taking my peptides. The fat burners, which is called Lean. I'm taking Fit, which is an amazing orange drink that just builds muscle for you, 4 times more protein synthesis than creatine. Amazing stuff. Go to getmeleanusa.com, get you the performance pack. I think it's $200 or $300. You can cancel it anytime. And if you go on subscription, it's 10% off. But all American made, all amazing products. And you get 10% off if you go on subscription. You can cancel anytime if you don't like it. No big deal. No pressure. It just helps the show. This stuff's very expensive, producing these podcasts. And anyways, hope you guys enjoy it. God bless y'all. And give me a call if you want to talk, 813-448-3446. Or you can email me at info@cortezwm.com. God bless. And don't forget to like and subscribe on Rumble, Spotify, Apple Podcasts, and YouTube at Scriptures and Wall Street. God bless.
I'm a warrior for the kingdom on Scriptures and Wall.
So how many times have we gotten lost in the minutia of the everyday life? We've gotten fat, we've gotten lazy, we've gotten complacent, not just in our faith, but also our fitness, maybe our finances, maybe our marriage, maybe our family. But we've gotten complacent, and we constantly need to continue to grow. And one of the things I was weak at was in my fitness. As a former athlete, I thought I had it all. My ego got in the way. I'm like, I'll do it later. I'll do it later. Up until now, I have been able to focus on my fitness. For those of you who've been following me for 3 or 4 years, you understand that I've gained a lot of weight. I've used the excuse of having 4 kids, a marriage, a business, helping out at church, all these excuses. And I keep putting myself in the back burner. This is deadly. And what I love about this company, what I love about taking ownership, is that GetMeLeanUSA.com has the ability to introduce natural, groundbreaking peptides. What your body demands, what your body needs to release those fat stored cells, to build muscle, to gain your physical being back to where it's naturally supposed to be. We're not talking about big pharma saying we're going to come out with the weight loss drug. We're not talking about losing muscle. We're talking about gaining muscle, gaining your physique back, controlling your appetite, giving you the edge that you need to help you get your body back in check the way God intended it to be, by using his resources with America First products, with America First company that aligns and believes in what you believe in. Introducing GetMeLeanUSA.com. Get in. This is going to be groundbreaking, huge business opportunity, as well as a huge groundbreaking technology that is going to change the landscape. So I know good things before I see it, and I highly recommend you get in. All you got to do is click the link below and get you some fit, get you some lean, and get fit and get lean. This is not going to do everything. Of course, diet and exercise, you continue your walking, continue your protein intake, but man, does it make it a whole lot easier to get in shape. Look at me, I've lost 60 pounds, but this is actually fundamentally a great recipe to get back in shape. And I can personally attest to the amazing effects of this product. So go to GetMeLeanUSA.com. You won't regret it. You can cancel anytime. They're affordable, and yet they're effective. And you are supporting our show. You're supporting yourself. You're supporting a mission. There is an affiliate program attached to it if you would want to share it with your friends and family. There's a whole nother opportunity there. But more importantly, let's get your fitness back in check. God bless.